I'm very excited to announce to you that Focus Capital has a new opportunity for investment. We are acquiring the Bend Apartments, 312 unit property built in 2024, Class A, fully amenitized property. This will be the third acquisition in the same area that we've acquired in the Louisville MSA on the Indiana side of Louisville. We pursued this for over a year now. It's the third property we bought from the exact same seller, and we're very excited for several different reasons here. One really is the basis. As you know, in real estate, you make your money on the buy, high quality asset, 2024 build, basically brand new, no renovation risk, no capex risk, no lease up risk. And we're acquiring this at a 21% discount to what it would cost to replace it today, as well as a large discount to what other properties are trading for in the market recently and currently. On top of that, this has a $475,000 annual reimbursement to the property tax bill through 2040, so close to a $500,000 discount annually, which will definitely positively impact investor returns and cash flow. The market is very, very strong. So this sits in the Indiana side of the Louisville MSA, just about 6 minutes over the river from downtown Louisville, Kentucky. The major driver here is the River Ridge Commerce Center. It's about 10 minutes away from this property. It's a 6,000 acre development. Last year there was $3.6 billion in economic impact made last year. Over 80 employers like Amazon, GE, Collins Aerospace, as well as a very large $700 million metadata center. There's over 21,000 jobs supported regionally. It's been growing. In fact, it's actually doubled from last year's job count. And the Indiana side is favorable because it has a lower cost of living, lower taxes for residents, and still just a few minutes from downtown Louisville over the border. The supply story is very strong as well. So, really why now? New starts have continued to fall. We're now this year at about a 70% decline from new construction starts over the last couple of years. Other comparable properties in the area have now removed concessions, if not all the concessions, the discounts that renters get when they first move in. Occupancy is held steady, and at our current properties that Focus Capital owns and operates, we're already seeing a 95% average occupancy rate at these properties just minutes away. So essentially, we're buying a brand new property as the construction timeline is at its low. We're buying the bottom of the cycle, not the top. One of the strongest reasons we're buying this property is we already operate here. We already know this market. We've already acquired 340 units within 10 minutes of the Bend. We acquired Gateway Crossing and Heritage Square last year, May and October. So it's not a new market for us. We already know the market. We know how the renters are. We know how the concessions work. We know we've already been getting rent increases. We've been getting renewal increases. We've dropped the concessions. We're seeing very, very high growth on the renewal front and the revenue front. And we've distributed to all investors on time every quarter since acquisition. Our track record of Focus Capital, it's important to have one of those. We have 4 full cycle exits, soon to be a 5th here very soon. We've averaged a 2.1x equity multiple on those dispositions, and we also have current active capital events ongoing on current projects like refinances and other potential sales, as well as a growing base of repeat investors. Return projections, that's one of the biggest things that people ask about. What are my returns? The projected return on this property is close to double your investment over a 5-year period of time. So how is that broken down? Well, you get tax benefits year one, you have cash flow along the way, and you have a large gain at the sale when we sell someday. The average investor annual cash flow is 7.4% projected, 15% plus IRR and internal rate of return, which is a 8% preferred return, creating great alignment with investors, and an 80-20 split of the cash flows and the sale gains throughout there. And really, the biggest thing I love about this property and all properties really is my number one reason for getting started in real estate was the taxes. As an investor, you'll have a significant year one tax benefit through depreciation on your K1, which should be around between 70 to 80% of your investment amount on this property. Focus Capital, like we always do, we put our own money in these properties. This one will have a co-investment amount of 10%, approximately $2 million of personal and joint cash here, creating great alignment between investors and the general partnership team. I've always invested my personal cash in every deal that I've done. I personally guarantee the loans. So what that means is if the deals don't perform, it costs me first. So if you want to see the full details, the business plan, the numbers, the risks, the offer materials, let's walk through it together. Visit the deal room on our Focus Capital website to learn more. book a call with me and my team. We'll go through it in person. If you're here locally, come grab coffee with us, come to the office. This opportunity is open to accredited investors only through the SEC rulings. It's offered through our PPM. And as a reminder here, the projections are targets, not guarantees. But I will say this, our last Louisville MSA project was oversubscribed before we closed on that project last October. So I'd recommend book a call with us. Let us walk you through how simple it is to register, answer your questions, and go through it in detail. I'm looking forward to personally partnering with you on this project. We'll talk very soon.